Another month in lockdown for Melbourne and Sydney, yet the property values in these cities, along with the rest of the country, continue to soar. In today's video, we are going to look at the factors driving this growth and why we have, on the one hand, a weakening economy, rising unemployment, extensive business closures, and on the other hand, a soaring property market. We will also look at how some of the different markets in Australia are performing and what we can expect going forward. Hey guys, welcome back to the channel. I am once again running on 4 hours of sleep, but bringing this content out for you guys. So if you guys do enjoy the video, please do me a huge favor by hitting the like and subscribe button. It really helps us the channel a ton. And as always, I am not a financial advisor and this is not financial advice. Please understand that. I'm simply sharing my personal opinion and strategies, and I will always recommend you to do your own research and due diligence. Just when we thought we will see a cooler market due to the economic conditions and all the uncertainty surrounding the lockdowns, the property market surprises us with another month of very strong growth. Looking at the latest housing data released by CoreLogic, we can see some very impressive growth across the entire property market, with Hobart once again being a strong performer. Hobart led the pack with a growth of 2.27% over the last 30 days, which is absolutely insane considering how strong it has been growing not only over the last 12 months, but over the last 5 years. Over the last 12 months, Hobart has produced a growth of more than 26%, which equates to around a $130,000 gain to the median property values there. And this is only part of the story. If you had purchased a property in Hobart, pretty much anywhere in Hobart 5 years ago, it would most likely have seen your property double in value or even more. You guys all know that I absolutely love Hobart. If you guys have ever been there yourselves, then you will know exactly what I'm talking about. It has a very different vibe to the bigger cities. It has this very relaxing and country town appeal. However, this wasn't the only factor that attracted me to Hobart 4 years ago when I purchased my first investment property there. It was the fundamentals. Back in 2017, when everyone was going crazy buying up everything in Melbourne and Sydney, I simply saw those markets as too competitive and too overheated, and I did not see any value in such an overpriced and unaffordable market. Hobart, on the other hand, had numbers that made so much more sense. It had rental returns that were above 6%, and that was still growing rapidly, as well as a vacancy rate that was less than 1%. So why did Hobart have such strong numbers? On this channel, we talk a lot about the property cycle, as well as demand and supply. And it's amazing how these two very important factors work together to create a growth cycle. So Hobart had a period of stagnation prior to 2015, where it did not see any growth or very minimal growth for almost 10 years. And that's made Hobart the most affordable housing market in Australia. When a property market is so cheap and affordable, it gives the developers zero incentive to go in there and increase the housing supply, because it is simply not as profitable as developing a property, say, in Melbourne or in Sydney. And we can't rely on the government to build enough housing for everyone, because the private sector, the private construction sector, accounts for an overwhelming majority of all new constructions built. So with such a shortage of housing supply and the lack of houses being built over the last 10 to 15 years, Hobart suffers from one of the worst housing shortages in Australia. And if you don't believe me, you can go into Hobart and try to buy a property or rent a property anywhere within 40 minutes to the city, and you are going to run into a ton of competition. The government and the private sector are doing everything they can to try to increase the housing supply in Hobart, but there's just simply not enough being done. And as long as the housing shortage is there, I expect Hobart to continue performing strongly. But we should be very cautious when we are looking to buy into such a competitive market where the median income is the lowest in Australia. It's just something to be aware of when you are trying to outbid someone and pay 10, 20 or even 30% more for a property. The second best performer was Canberra, with a growth of 2%, bringing the yearly total to 24%, which is once again just a crazy number. This is a market that has performed extremely well due to various factors such as low housing supply and very high median income, the highest in Australia in fact. Personally, Canberra is not a market that I look into too much because it doesn't really fit my criteria as an investment, because most of these properties are negatively geared, and it is also very expensive to get into the Canberra market. And I simply don't see the same potential that I see in some of the other markets in Australia. And if you have been watching my videos for a while, and you have been keeping track of the properties that I've been adding to my portfolio, these properties are usually within the 300 to 500k price range. The main reason why I target properties in this price range is that a lot of properties in this price range, especially in a good market, will be cash flow positive. This means that if I do decide to go overseas for a couple of years and enjoy life, I won't have to worry about paying down my mortgage because my tenants will be doing that for me. Secondly, I think affordability plays a very strong role in sustaining growth. If the general population of a particular market can't afford to buy a property there, then who is going to drive the demand to achieve that growth? Because after all, investors only make up about 30% of total buyers in the market. So without first home buyers and owner occupiers, the market will slow down significantly. It is for this exact reason why I don't look at markets like Melbourne and Sydney, because it is simply too expensive. And the affordability issue there is crazy. We have young couples who are on average incomes drowning themselves in debt, crippling debt just to get into a property. And I think that is very concerning. Let's now move on and talk about Melbourne and Sydney. These are two of our biggest markets and they have been plagued by extensive lockdowns. Yet the property values here continue to rise. Sydney recorded a growth of 1.9% last month, bringing the annual total to just under 24%. For a market where the median house price is well above $1 million, that is a crazy amount of growth. After being plagued by 2 extensive lockdowns, Melbourne still managed to record a very healthy monthly growth of 0.8%, bringing the yearly total to 15%. I know a lot of you guys are wondering how Melbourne and Sydney were able to record such strong numbers during a period when there's so much uncertainty and when everyone's stuck at home. The answer comes down to demand and supply. There were simply not enough listings for everyone before the lockdown started. And when we did go into lockdown, that supply dropped even further because agents were not able to appraise properties or list them onto the market. And after everybody went into lockdown, they had more time to look at properties, which added even more demand and made the equation even more unbalanced. However, like we have been talking about in my previous videos, there is a backlog of properties that will come onto the market once the restrictions are lifted. And I don't think this will cause an oversupply and crash the market, but I definitely think it will balance out the demand and supply equation. Combined with the affordability constraints which are already starting to kick in, I personally don't expect to see that much growth in Melbourne and Sydney over the coming months. Next up is Brisbane and the Gold Coast. These two markets are definitely starting to heat up, not just in terms of searches per property, but also in sales and demand, as well as the price of these markets are also starting to skyrocket. Brisbane recorded a growth of 1.8% last month, which brings the total up to 21% for the year. These are crazy numbers, but I personally expect to see this growth continue in the coming months, because Brisbane and the Gold Coast are very strong markets and the affordability is certainly still there. Even though it is definitely not as affordable as it used to be, but the median income in Queensland is quite decent enough to sustain this growth for a period of time. Combined with the upcoming Olympics in 2032 and all the infrastructure projects that the governments will be spending a ton of money on, which will in turn create a lot of jobs and lead to a lot of money being circulated and flowing around the Queensland economy. I am quite bullish on the Queensland property market, and I definitely regret not getting into this market last year. I mean, I can always get into these markets now, but based on what I'm seeing and the numbers that are coming through, these markets have become so competitive that it is almost impossible to snag a good deal, and that's what I look for. In the current environment, due to the excessive competition, we are almost expected to pay 10, 20, or even 30% above asking to have any shot of securing a property there. Therefore, I am very cautious when it comes to investing in Brisbane and the Gold Coast because they are so damn competitive. And you should be very cautious as well, because when you overpay by 10 to 20%, that is you sacrificing your future growth. You are essentially paying 2023 prices right now. Let's now talk about Adelaide, another very strong and very competitive market. In my personal opinion, Hobart and Adelaide are some of the most competitive markets in Australia right now. I talk to a lot of agents on the ground who tell me that getting 20 to 30 offers within the first week on a property is not uncommon. And the scary thing about this is that a lot of these offers are unconditional offers. While these selling conditions are great for the sellers who are cashing in huge profits, but for the buyers, it is absolutely horrible because one, you're almost guaranteed to overpay, and two, you can't protect yourself by making the contract subject to finance, subject to building, subject to pest inspections. When you sign an unconditional contract, the contract is unconditional. It means there's no way for you to get out of it without forfeiting your deposit. It is very dangerous to sign an unconditional contract because what if you find termites on the property, or if you find major structural issues? Well, what if your finance doesn't get approved? You are waiving all of your protection when you sign an unconditional contract, and I think that is very dangerous. With that said, Adelaide is a very strong market and the growth coming out of it is nothing short of amazing. It recorded a growth of 1.9% over the last 30 days and 19% over the year, adding about $100,000 to the median house price. Similar to Hobart, Adelaide has a very bad housing shortage, and this is reflected by the crazy level of competition as well as the vacancy rate, which is pretty much zero across the entire city. If you had gone into this market a year or two ago, it would have done extremely well for you. I remember I was looking at a property down in the area called Elizabeth about 12 months ago, and properties there were selling for less than $200,000. Looking at the same properties now, to get anything decent, I'll be paying more than $300,000. While the growth in Adelaide is quite strong, we need to remember that South Australia has the second lowest median income in Australia. And this is just something to be aware of because if property prices keep growing at these rapid rates, affordability constraints will start to kick in. Last but not least, the worst performer in Australia, the Perth property market, which only managed to record a growth of 0.34% last month, bringing the yearly total to 18%. If you guys have been following my channel for a while, then you will know that I absolutely love the Perth property market. The numbers and the fundamentals just make so much sense. The second highest median income in Australia, very short housing supply and very affordable housing. I think a lot of people overlook Perth because it did not perform that well over the last 10 to 15 years, and they would rather focus on markets that have performed extremely well, like Melbourne and Sydney, or even Hobart. If we think about this logically, do we really want to buy into a market that has been growing so rapidly over the last few years? Or do we want to invest our money instead in a market that is just starting its growth cycle? A lot of people say Perth is not going to perform well over the next few years because it is so dependent on mining and because it has not performed well for the last 15 years. However, if we look at the property cycle and we look at markets like Hobart, which barely saw any growth for 10 years prior to 2015, and all of a sudden it just exploded. And a lot of people used to say that Hobart will not see any growth because it has no real industry, and that tourism was its only industry. And we all know what has happened since 2015. At the end of the day, everyone's entitled to their own opinions, and that's completely fine. And my personal opinion is that due to the fundamentals and the numbers, Perth is likely to see a similar trend in the coming years. If you guys would like me to make a video going over Perth in a bit more detail, just comment yes down below and I'll take a deep dive into the Perth property market. Alright guys, this brings us to the end of the video. I want to thank you guys for watching the video to the very end, and it would mean a lot to me if you can hit that like button right there and subscribe to the channel. It really goes a long way in supporting me. I hope you guys stay safe and productive out there, and I'll see all of you guys in the next video.